Paul, thanks very much. And yeah, I'd just like to share with you guys, Paul's father passed away last night. Just thank you so much for attending, Paul, and being here with us. Our hearts are with you, and I know it's a difficult time. This COVID's impacting everybody. So thanks so much for your commitment and your involvement, and it's really appreciate you being with us.
Thanks,
we'll hold you in our prayers.
Sure. Thank you.
Okay, so guys, this is the last of how to analyze data, and it is a fantastic. I love this area. I think in the last 2-3 months, I've been building data warehouses, data products, data. Everything's just been data, and I really like the session and the preparation for this week, because it's something that I've battled with for years, where people come to me and they say, how do you value your assets? How do you create this? How do you do it? How do you put it all together without just doing something that you almost, in a way, you're trying to pump up your assets, you're trying to get some sort of business case. And I've always been concerned that I haven't really and fully understood this data asset valuation. So I think it's a fantastic topic. I would just like to say at this point in time that there is no defined and agreed way of valuing your assets and defining an asset valuation. There's some suggestions, but there's nothing well defined. And I think until GARP or GAAP accept a principle of asset valuation, we're going to have lots of opportunities and way things happen, but it's going to take some time before we can stabilize on this topic. So let's just go through a bit of a review of what we've done. We did the essential concepts right in the beginning, and we've sort of done them each week. We then looked at the data manager and how does he establish decision-making capabilities. I think it's very important that your data managers create this environment. They must make sure they've got the right people, the right vision, the right strategy to improve decision-making within the organization. And part of that chat was all about really focusing on this thing of the execs saying they don't really have the information they need to make a decision. And how do we transform the company from having lots of arguments and debates about a decision that needs to be made, but not making it promptly and well? And that's something that I think it was McKinsey that pointed out the difference between a differentiator between the top 100 Fortune companies and the others. Then we had a nice section that Paul and Esty with the pandas, they spoke about the messy to ready. I know that that's actually going to be presented at the SAIIE conference. So look forward to that. That's a nice recipe. We then went on to data DevOps. Missing that was data citizen. Our data engineer, we went on to DevOps. And then we had, and today we're looking at the data executive. We also introduced the data divas this month, and I think Debbie, if I'm not wrong, today is a special day.
Yes, it is Women's Equality Day.
Okay, so Women's Equality. Okay, fantastic. So that was a great session held, and we were really thankful to those that attended and shared with us. But let's go back a little bit on a review of the different essential concepts. So this is the mind map for data warehousing, and we can see with the detail in data warehousing that it's so mature compared to that of big data. And I was fascinated again to look at the difference between big data warehousing and big data. The data warehousing context diagram is a lot about architecture and different aspects and vision and mission and governance and things like that. Whereas what I found with big data is it's there and that, but it's not a well understood. I don't think we certainly haven't had the experience of running these type of shops, running these capabilities. So I think our data warehousing section is going to grow tremendously, but I'd still believe it's part of the how to analyze data and the improvement on decision making. So that will always be there with us. Okay, we had the different big data context diagrams from the mind map that Veronica put together for us. We spoke about the different components of the big data and the architecture. We had lots of discussions on data lakes, integrating with your data warehousing, that speed layer, the batch layer that we spoke about. Typically, your warehouse is the batch layer, and this one over here is your speed layer of getting data in, and then some of the processes. These were the definitions, helpful to go through them. These were some of the business drivers and insights, and for me, they apply to both of them, and it's all about answering business questions, looking at the cause and effect. And there was a really nice LinkedIn question. I don't know if any of you guys saw it, and someone was asking about, what is the possibility of having a rule of thumb for decision making? And I thought it was a really important question, but I do find that there's so many aspects to that, and especially if we how well we understand the cause and effect. So I know I introduced the Cynefin diagram. Any of you guys did some reading? Hopefully you did some reading on the Cynefin diagram, and you saw those different areas of making decisions where decisions can be put in. There's one area right in the middle, which is called chaos, and the area down at the bottom where data is not going to help. So can we have a rule of thumb? Is that possible? I think in certain areas, yes, but not all over the place. And I believe that's helpful for all of us to understand where we are limited, where we are going to battle. And we had a similar discussion in last week when we spoke about making decisions and realizing that the decisions and the insights we give is also going to be interpreted by humans, the context, their mindset in terms of where they're at. And we don't always have control of that, and we don't always understand it, so people can respond to our insights very differently. Okay, so it is a tricky scenario. Yes, we want to support the decision as much as possible, but we're also going to have to start stepping into the tacit knowledge and the different ways of perceiving information and providing more context for people to work with. Right, so we mapped both the little data and big data. These were the data management areas. We said that the data engineer was responsible for all the different areas. The data citizen was largely responsible at the data product level, and then also at some of the big data approaches, some of the big data analytics that they were going to do within their departments. Now, I've put the data executive in this area, and it was a bit of a problem getting those things and getting enough visualization, but it's predominantly around the data product, looking after the data product. And I think it was last week when I introduced that new term, information valorization governance. I don't know if any of you guys went to look that up, but I certainly did. And it was helpful because it led to this talk in terms of saying, when we have a value for our information, then we have to govern that value. And I must admit, this is probably the most exciting thing about data asset valuation is once you attribute a value to it, you have to start looking after it. And then the ability to build a business case around investing in it and having more spend and getting the right people, that's when it starts to be more meaningful. But always what we're going to face, the problem we're going to face with that is that if the CFO or the CEO doesn't believe that we've valued these assets appropriately and he doesn't see that value, well, then he's not really going to be convinced about your request to invest in more infrastructure, more people, more aspects like that. So we've got to get this valuation right. And so I don't know about you guys, but I've battled with this. Has anyone else tried to do it? Has anyone else established this sort of valorization within their businesses? Anyone want to put their hands up and share some of that? Okay. Yeah,
it's going to become more common now, isn't it, to have value of data in the balance sheet? It's creeping in, but it hasn't really.
Yeah, and because GARP hasn't accepted it, Reza, it's not going to go into there too quickly. I think people are trying to get it there, but it's away from there, and it's helpful, this discussion that we talk about now. They really did a great job. It was someone who was reviewing Doug Lanley's book on Infonomics, and then looking at the prices that people have paid for LinkedIn and some of these data companies, and they're asking, where did they get the value from? How did they value that? There wasn't a fixed value, and it's what people refer to as a market value. So has someone in the market paid something for this before? And it gives us an indicator of the value that we're looking at. And that's sort of where we're getting to. But let's go through it and we'll get to some of the different ways of doing it. Okay, so these were the metrics. I've added this one. I do believe it's critical, and you'll see as we go through it, there are lots of metrics within data valuation. The economic value of information, the usage value of information. So I think there are a lot more metrics than that, but because it's not a well-defined and accepted area, I don't think the guys in the DMBOK went that far to bring data valuation into a metric. But what a great thing to have as a metric. And I think as data governance, I've always wanted to and always sort of requested and demanded to an extent that we need to have a monetary or a link to business value. And this is, I believe, is one of the keys to creating that link between data and business. Okay, so this is an area that I always like to try to express what is important to the executive, what is their bottom line, understand what they want. So if you're going to be supporting your CDO, your CIO, whoever it is, do we understand what it is that they want? What is the fundamental? And of course, it's business growth. But I think that's probably applicable to all the different knowledge areas. But I think this knowledge area is the one that can really deliver on that. It's that aspect where we're using and enabling data that not many of the other knowledge areas play in and get involved with. Of course, they set the foundation, but they're not responsible for this insight. So it's answering critical questions relating to the one metric that matters. And these are the 5 questions that I like to have, and I'm always focused on what happened, why did it happen, what will happen, what should I do, and what don't I know. Making good decisions and then moving towards the business goals. So are we measuring the business appropriately, and are we enabling us to reach those targets and understand why we're not getting there? So who is opposing the executive? It's the voice of data. The voice of data is discordant. So data itself is opposing the executive. When we have different reports saying the same thing, people say, well, there you go. You can't trust it. And why should we listen to it? Why don't we just make our own decisions? Okay, so we have this situation of the vision is blurred. What is it that what is it that we're trying to achieve? And people see it differently. And we need to get that in line. The data vocabulary is confusing. We all know about that. So what does it look like? What does success look like? Executives are not baffled by this big data and AI and all this sort of stuff. Hopefully one day we'll just call it data again, and not big data and little data. It's all data, and it's all helping us there to make decisions. We are making decisions promptly and well. Data management is providing truth. And then the meaning comes after that when we look at the analysis, analyzing data. If we fail, we will always battle to get the data culture right. If we can't win in giving the right insights, people are going to go to other places to find the insights they require. And then we're going to have unanswered questions and strong disagreement hampering decision making. So it doesn't look very pretty, and I'm sure a lot of us recognize this and see it in our organizations. Yeah, it's a challenge. Okay, so I actually wanted to put my reference material up first. I don't know if you guys, I don't know if any of you are using these collection pages on the internet, on your browser. I really like it, and the nice thing about it is that you can actually export all your reference material. So there's some really powerful, I mean, when you go onto the web and you search for data value, I mean, there's infinite numbers, and you have to be able to bring it down to what's important. And these were the areas that I really liked. And the one that really got me thinking was one of the guys who writes the Big Data MBA. He now actually said it's not about data monetization, it's about insight monetization. Wonder how many of you guys have heard of that before today. And I do like it. I prefer that way of thinking compared to this data monetization. And it's not to say there is no data monetization. It's about getting the right insights and what does the value of the insight mean to the business. And of course, there's Doug Langley's book on infonomics. And I would also like to share with you, there's something from ODI and the Bennett Research Institute in the UK. They've done some fantastic work about open data and having more controls on governmental data and data that just keeps the country going. So they have a different way of setting policies. ODI's got some good papers on that. There we can see the value of data from the ODI, and then these are the research approaches, research companies. All right, so starting off, one of the things that this is the guy that I was reading the paper on monetization versus insight monetization, and he conducted a poll on LinkedIn and said, who's in charge of your data value? And 54% of the people, and this was in July, 54% of the people responded to say that it's the CIO. And he said, you can see from this that typically your CIO is responsible for technology and keeping operational systems up and running, and they're not focused on making money. And you can see, so that's how far we away from really working with assets that bring value to the organization and drive revenue, and they're still sitting in the hands of the CIO. And some of his comments were talking about when we do bring in a CDAO, and a lot of times organizations set up these positions, but have they got the right level and the status in relationship to the CIO? And I found I see lots of CDOs, CEOs, but are they equivalent to that of a CIO? We then went on to talk about a monetization council, and I know I've been involved in introducing EIM to lots of companies, and by the time you get there, they have enough meetings, have enough councils, and they really don't want to create another one. And he has one where people are introducing a monetization council. And also like this situation, when you build your operating model after your data strategy, and you want to bring in, looking at the data, do you allow this to be business-led? So are the business units going to drive, and what's the co-creation between the creation of assets within the business unit or centralized in an innovation center? So depending on how you structure that operating model, depends on what level of centralization or decentralization you'll have on asset creation. Okay, data value terminology. Again, when I was planning the course and thinking about it, I had to go back and say, well, what do these terms actually mean? What we hear all these different terms, but I'm not always too sure the different meanings. So that was my first job in trying to understand the exact definition. And this was done by, I think it was MIT, where they defined data value as a composite of three sources of value: the asset or stock value, and then the activity value, and the expected or future value. And there's another one which we'll share at the end that I found later on. But I like these three, where there's an asset. So yes, we will create a data asset value, but then there's also the activity value. So how often is this asset being used in business activities? And what's the usage mechanism? What is the usage metric of that asset across the organization and the value that they get out of it? Expected or future value, that's always tricky. We always think that our data is going to be a lot more useful than it is, or it turns out to be, maybe because we don't do a good job of it, but it's that, how do we forecast that future value? Then we have data monetization. What is that? And the definition from Wikipedia, it's a form of monetization which may refer to the act of generating measurable economic benefits, cash flows, generating revenue from available data sources. Less commonly, it may also refer to the act of monetizing data services. So, are we providing a data through service? And that would be something like the Spotify and the digital transformation. Okay, and then another definition by Gartner saying data monetization refers to the process of using data to obtain quantifiable economic benefit. And then we also talk about internal, includes using data to make measurable business performance improvements and informed decisions. So I think quite often when we see monetization, we jump to selling, but what about the data products that are within your organization and the business are using? How would we monetize that and define a value for that? Okay, then we have insights monetization. So that's this new term, and I relate to this one probably more than data monetization because I've seen this value over and over again. Where business leadership are there to envision how the organization can leverage and blend their wealth of customer, product, and operational insights to create new monetization opportunities. So what we're saying there is that data and insights can help them create new products, new options and opportunities within new markets and audiences. So it's not always the data that is sold that we need to focus on, but it's those insights that we're generating that can help the business pivot, help it go in a different direction or add new services or add improvements to existing services. And that's where, for me, it becomes a little bit more closer to home, things that I can relate to and things that I've experienced. Okay, so those are the three. Now, this is a pure form of data monetization, and I found this interesting and also scary in terms of what people are selling about you. Now, what I find challenging about this is there's things like political views, health interests, religion, all of the stuff that data privacy is saying, oh, you got to be careful about it. Why are we doing it? But and people are still selling this, or they're currently selling it, but how much longer are they going to be able to sell that for? And where do they get this data from? How are they collecting all of this information? The type of home that we live in, is it multifamily, mobile home, prison? Interesting. Likelihoods of someone in a person's household is planning to have a baby, planning to adopt a child, and filling in taxes in April. Are they planning to do that? So the insight is quite impressive. But I think this is something that we can quickly look at and see within our own businesses is this insight monetization. And this is the guy that wrote the paper on Big Data MBA, so certainly go and read it. And he talks about these maturity phases. So when you go from business monitoring, external monitoring, as well as internal monitoring, and you go from the monitoring, and that's basically in your warehousing, that's going to be your fact tables. And outside, it's going to be the different events, which you bring in insights, and then you optimize the business. Remember, we spoke about the question of what should I do, and then how can I make it happen? So now we go into these insights monetization. So what do we do with this? Interestingly enough, notice that digital transformation is further down on the maturity scale. but at this stage, I'm sure many of you are aware of everybody is now selling digital transformation. Okay, so one of the aspects that he spoke about, and I like this, is that we got to transition from averages to propensities. So what affinities do we have? What propensities do our customers have? And I like this one, and I've battled with several customers. It's not about the volume of the data, it's about monetizing the granularity. So when you get the right grain of data, that's when it really makes a difference. And he just demonstrated the difference between just a set of numeric values or like revenue and things like that. You've got to move from revenue to understanding what makes your customer make a buying decision and what makes your customer leave. So what are the propensities? What are the affiliations? What are the preferences, behaviors? So these are the sort of nano economics to help you with your decision making. Nice thing to understand, and I'm sure you guys have seen it, something like lifetime value. I've shared it a few times on One Metric That Matters. These are the type of propensities that you want to measure and inform your business on it so that they can see how they're performing and adjust and make the right decisions. And this came from a paper called Why Data Monetization is a Waste of Time. And I'm sure all of you guys know a lot of times that people write these headings to get people talking and discussing and responding. So he's certainly not saying that there is no such thing as monetization, but he is saying with the scariness that we have in of this type of thing and getting into data privacy and protection issues, it's probably easier for us to relate to monetization or insight monetization. Any comments on that, observations? All right, so of course, before you even start getting into valuation techniques or actual algorithms, what we need to look at are what's the characteristics of data that's going to affect our value, and this is really helpful whenever you build data products in your BI. If you're not associating the quality and the lineage and the flow and the coverage, you're missing a big part of managing your data product. And then what this is saying as well is that you are also missing the ability from what they refer to as informational characteristics of the data. And we break it up into these different areas. Subject area. Okay, so what does the data describe and what can it help with? So when you break up your data into a data estate and you've got the different subject areas for each data element, you talk about what is it describing and what does it help with. And there's a good way of modeling those that data estate in the data landscape. Then we've got generality. And this one is how useful is the data across the organization? So a good example of that is customer master data or product master data. That's very general and can be applied in the insight decision making across most of the decisions that you're doing within the organization. But then you also have information that's a lot more focused and a lot narrower. And so the impact that the data has within the organization, if it's part of the data value chain, then you know that you're getting more value for your data. The temporal cover is a situation. How many of you guys have heard of, we've all heard of forecasting. Has anybody heard of nowcasting? And has anybody had any exposure of backcasting? So that's something that I was involved with econometricians. They have this idea of nowcasting. So the simple analogy is to say, depending on what's happening within the economy at the moment, they want to almost produce a recommendation or not a forecast of what's going to happen in 3 months' time, in 6 months' time, but what's going to happen now, almost what's going to happen next week. So there's the idea of nowcasting. And then you've got backcasting as well, as to say, if you chose this approach, or if you use this variable, what would have happened in the past? And then you can almost validate your model. Okay, we've also got quality. So of course, quality is really important. Sensitivity, and the more sensitive your data is, you're going to have more problems in terms of looking at the costs and the risks of maintaining that data. So if you've got sensitive data about people, the costs and risks of keeping that thing up to date get a lot higher. The other aspect is interoperability and linkability, and some interesting terms that people create, but it's how the data is used to interoperate across what sort of standards do you have. And then linkability means, is your primary key or your business key able to connect this data to other areas within the business and other data sets? And open data sets, for example, external data sets, how linkable is that data?
Sorry, Howard.
Yes.
Just back to generality.
Yeah.
Maybe I wasn't listening properly, but is it, if you're linking the data that you're managing, if the data that you're managing is linked to your value chain, you increase the value of that data? Is that what you said? Or
no, that's more about that. So we had this idea of subject matter encompasses the data and what it describes. Generality describes the fact that data can be useful in many different forms of analysis. So it can be applied in many different areas within the business to help them make decisions. Whereas other data has very particular cases within the business. So its applicability across the entire value chain and across the business. If it's more general, then it's applicable to more areas within the business to support decision making. That's where I mentioned master data. So something like customer master data. Just about all areas in the business can benefit from that general definition of a customer.
And are you saying then the more touch points of that general data, the higher that general data, the value increases?
Yes.
Okay.
Yes. Cool. So now it's not, I mean, I suppose one has to be a bit careful there, because we can have a specific case that which is very exclusive to us and that gives us insights that not other people are seeing, and people would be willing to pay for it. So exactly how much money you can demand for it would also, issues like exclusivity would come into play. But if you have a good, strong understanding of the customer, it can certainly be used in a lot more decisions and a lot more insights.
Got you. Cool, thanks.
Okay. Whereas, for example, if you just had, maybe what's a good example? If you had just specific information about contracts, as an example, right? That is not as generally applicable to all the different areas. The contract may be the initiating conditions and that, but it may not be applicable to your profit and loss or whatever it is.
Gotcha.
It may be, but it's
cool.
less focused.
Thank you.
Okay, thanks, Paul. It's good to clarify that. Then we can look at the economic value. So non-rival refers to a scenario where you're not depleting the asset and multiple people can use it. Okay, so when we have multiple people using the data, it's not like they're contending for that resource. Okay. Whereas if they are a restricted resource, then as a person's using it or holding on to it, they're affecting other people's usage. Okay, so we don't have the data is typically non-rival. And then we've got excludable. So data varies in whether it's excludable. So data can be for public good or club good. They have these two things of public and club. Now, public would be open data. That you'll get weather data as an example. That's public data and anyone can use it and anyone can apply it. For example, where we had that guy who did the weather patterns to predict the flying conditions. He has access to that and that's free. Now, when you go into a group good or a club good, now you're talking more data that's unique and only usable for a specific group of people. Okay. And of course, the wider your data is, the more options you have of trading that data and making it useful to lots of different people. Then we have externalities, which is a term that I had to look up, and it's an economic term. And externality, and that's why I put it down here. It's a cost or benefit that affects a third party who did not choose to incur that cost or benefit. Okay, so if we have data, and our data can cause a positive externality, or it can cause a negative externality. And a positive externality is when we improve the life of people. So they didn't ask us. That was something similar to us or Google when they set up when they initiated that project of helping people with mapping out wheelchair access routes on different buildings. And that was fantastic. They had a public good, but then they moved along and they decided to keep that and not share that data with other map providers. So it reduced its exposure. Okay, but now we can also have a negative externality, right? So if we have data that if it's leaked, someone can be harmed by that leaking of data, like religion or whatever it is. That can cause a negative externality. Okay, now if your data has a possibility of causing a negative externality, now you've got to be careful, and your value of your data is going to decrease. Okay. All right, then we've got returns. So increasing or decreasing returns from an economic point of view. So the more data we collect, the more the data increases the insight. Now we've got to be careful with that, is that in some cases we can just collect data and it doesn't increase the insights, and then it's just known as data hoarding. So we've got to be able to differentiate that the more data we collect, is it actually improving our insights, or is it creating a negative response? And then we've got a large option value, again, economics, and that's due to perpetual development of new technology and data sets. It's hard to predict the value and how it may change. So remember we spoke earlier on about the future value of data. So if we keep on collecting, is it going to be helpful and beneficial in 5 years' time? So do we have a large option value that it's going to get better and better as we increase the collection of data? The other aspect, economic value, is a high upfront cost in terms of setting up the infrastructure, the people. But once it's up and running and we've automated a lot and we've built the routines for transformation and linkability and all those things, then there tends to be a low marginal cost. So we have to also understand what it's going to cost to set up, and then what is the margin cost as we progress. And then the last one is complementary investment. Okay, so that's where we've got other aspects that are needing to be invested in the economic value, like software, hardware, and personnel. So who needs to be available? What levels of skills do we need to derive value out of this asset? All right. So, yes.
Sorry, man. Just back to, if you don't mind, a non-rival.
Yeah.
Just triggering one of the cool benefits of data is that one of the comments in the DM box, it can't be used up.
Yeah.
So that's just clashing with the comment. If you can help me with an example of when could you be using data, then I can't use it. Like if we were sharing a laptop, if I'm using it, you can't use it. That I get, but the data element,
I think that's also what they're saying, Paul, is that we can have multiple usages of that data unless it's in Excel.
Okay, so that's what you mean by non-rival. It's an attribute of, okay, not there's not cases where there is rival data versus non-rival.
Yeah, so I mean, data in itself, just depending on the database management system that's managing it, it's if it supports multi-user, then you don't have a rival issue. If you using it within your own spreadsheet and stuff like that, then there could be challenges of sharing that data.
Okay, got you. Thanks.
That has more to do with the instance. Yeah. of data, right? It's not really data itself. It's the form. It's the physical representation of it. That's the issue there.
Well,
Okay.
yeah. Look, you also got challenges where there's the logic is put in an Excel spreadsheet where they're doing some R manipulations on the data set, and no one else can really access that information.
Okay, cool. Thank you.
All right. Okay, so what I started doing, which was of a lot of interest to me, is as I build my data products on the data warehouse on the dashboard, we can start labeling or classifying the data with these characteristics. Okay. And it's quite helpful. You can pick up your subject area, you can pick up the generality, you can pick up the temporal cover. All of these things are quantifiable. Okay. And it's helpful just to, when you build these dashboards, just to be able to have these attributes that are associated with your data. Okay, so data valuation, this is something that comes from Infonomics. We got these foundational measures. So how correct, complete, and exclusive is the data? This is the intrinsic value of data. How good and relevant is the data for specific purposes? This is what they refer to as the business value of information. So within those subject areas, how valuable is that information to business and its usage? And then how does the data affect key business drivers? That's the performance value of information. So, and this Gartner, and I know Doug Laney put a lot of, Laney put a lot of this together, where he looks at foundational measures and then he looks at financial measures. And I think it's a lot easier for us to discuss. A lot easier for us to discuss and measure the foundational measures. These ones get quite a bit, it's a bit more trickier. And so we can have our trailing indicators and our leading indicators. These tend to be the leading ones. So what good could we get from selling or trading this data? So the market value of information. So has anybody traded this data before? Okay. And if you have an example of someone else that got a certain price, then you have a market value of the information. Okay, so an example of that would be that customer data that we showed you with Axon trading that data. You can see that that's what people are willing to pay for the data. And then we've got, how does this data contribute to the bottom line? And that's your cash flows, and that's referred to as economic value of data. Okay, so these are focusing on the economic benefits, and these are focusing on information management or data management, and we sort of have a good understanding of that. All right, so what drives our valuation? I like these 7 or 8 that we put together. Exclusivity, I've mentioned that. Does this company have exclusive access to the data? Has nobody else got this data? That means we have more value. What is the timeliness of data? So the closer to present, the more value. Accuracy and correctness, the closer to truth gives us more value. Completeness, the wider the scope in terms of our subject areas, gives us more value. Usage restrictions, so the less approvals we've got from our customers in terms of data privacy, the less value. All right, so that's sensitivity. Interoperability, the more connections we have with our data, gives us more value. Okay. And liabilities and risk. So as the increase in the risk, we decrease the value of the asset. Okay. So I found these quite helpful to be able to take a data set, take a dashboard, take something, and then go through it and say, what is exclusivity? And one of the things that we're working on now at the moment is what they call an actuarial triangle. That actuarial triangle can help you price policies, and that exclusivity is unique to that organization. Yes, Agnes?
Can you please explain the last one, liability and risk?
Okay, so if you have a risk of the data, and the most simplistic example there would be if I have private data about the individual, and I haven't collected it with the approval, and I try to sell it, I have a risk of being caught by and have a data privacy case against me. If I have another example is if I can create a negative externality. Remember, we get the definition. So if I can negatively affect somebody with my data, I've got a higher risk. HR data, as an example.
Would you say that the data that has been used for credit scores and all that,
that's higher risk.
That's a high risk one.
It's higher risk data, yeah. Now, of course, one does these scenarios of you assess the risk, and then can you mitigate the risk, and what protection mechanisms do you need to put in place to mitigate it and allow you to make use of that data. And that's what your Experian and different companies do that sell credit data. But that's getting, I think we all know when we have all these breaches, I think this credit data is becoming a higher risk. And interestingly enough, what I found in talking to insurers, when you set up a company and you're going to deal with policies and actuarial values, you go out and you have to buy personal insurance, and you have to cover the risk of that data, and you have to cover the risk of those policies. And I was blown away in terms of listening to some execs that had bought a company, an insurance company, and the amount of personal risk insurance they had to take out. I mean, it was in the thousands of pounds that each exec had to pay for. So it's people are noticing and recognizing that you're dealing with high risk areas, and that means you have to pay more. All right, so a process for value realization. So we've sort of got the drivers and we've got these things, and then you have to keep this process going. And it's very similar to that of data quality, but it's assessing your current value, understand what data you have and where to use it, doing that classification on the characteristics, then getting a valuation. That valuation, especially if it's a future value, you will then go and look for investment to make the investments make the informed investments to make the data more usable. So that's the investment that you're doing with the data. And then it's your utilization, using the data to identify how you can create value for you and your stakeholders. So how is it being used? And then there's this process of reflecting and exploring what you've learned from the data and what you can improve in terms of decision making. So a lot of this is about keeping an inventory of decisions and looking at how well your data is supporting those decisions. What is the quality of the decisions that you're making and the inputs and the insights? Okay, so let's review, measure the value, spend to improve the value of the asset, use data in business initiatives like we spoke about with that insight monetization, and then review these stages for improvement, and round you go, very similar to data quality. Okay, so these are the different valuations that I was able to find in Phenomics, and you've seen quite a bit of it already. There's foundational, which you talk about intrinsic value of data, the business value, the usage, and the performance value. So how are we supporting the business drivers? We then have financial aspect to it. We can talk about the cost value of data, the market value, and an economic value. Then we have Bennett, which is market research, and they worked with the ODI, and they looked at the economic value of open data. So your smart cities and your governmental things, your national health, all those type of areas, how do they value that open data? And then what's the value of personal data, of your individual data? Okay. Now, this has actually been used quite interestingly in some cases where they can be setting up these communities that sell their data. Very much like a stokvel in South Africa, where people can get together and invest, and then they can use it to spend and buy. People are looking at that and building these databases of their personal data, which they can then trade depending on the trust and depending on the value that they get out of it. Now, other ones that are not as well known is and you can see that there's lots of similarities between this cost base and cost value are exactly the same. The stock market and the market value are the same. Income based and economic value are very similar. So you can see there's lots of similarities and crossovers. And what they've done is they've actually developed a modified cost value, a consumption based in terms of how it's been used. A data hub is when you bring lots of data together, very similar to an enterprise data warehouse, and you can call it a data hub. So it can talk to multiple subject areas. And then you've also got a stakeholder analysis where you would approach the stakeholder and say, what is the value of this data to you as decision makers within the organization? What would you attribute the value to be? Emotional and subjective, but that's one way of doing a data valuation. And it's a good way to start, right? Because I think most of us come in and we could get some aspects of foundational, and the other way then is to say, well, let's understand the business value, and we can do the stakeholder analysis of what they believe the value of the data is. Can be overinflated or it can be emotionally based. All right, so this is just a summary of what I've been through, the different slides. We can look at what questions the intrinsic value of information answers. Okay, what are the pros and cons of these different methods? And then we've got the financial measures as well. Okay, and I just wanted to share with you, this is the Bennett research done by ODI, and they've really put a lot of policies together to valuing public data. Now, we will get benefit out of using those policies to value our own data. So I really suggest you read that. I have downloaded it, and I was working through some of it in just trying to understand what they were saying, and that's how we picked up these similarities. Okay, then the last one that I spoke to you about, remember we had the future value of data. This is what they also refer to as the prudent value of data. So this one is what I really like, because this is linked to my data strategy. So when we build a data strategy, we should be talking to people about the prudent use of data. So if they have friction of using data within their business, how do we overcome that? And how do we improve the decision making on key business initiatives? And so this was an important one. So what is more crucial is that it sets the data valuation process around business decisions and the need to decide to move the business initiative forward. So that's exactly what we're trying to do within our data strategy, and we're trying to improve the data to make better data decisions. Okay, and that brings us to the end of data valuation. And everyone's been very quiet. I thought I'd have lots of questions today.
Howard, can we ask a quick question?
Of course, of course. I was hoping you would.
The data valuation, I mean, it's a super discussion. I mean, I really enjoyed it. Do you know of any companies, because one of the battles we've been having, or I've been having, is in terms of how the data, how we can get the data valued on the balance sheet, because all of a sudden when it's on the balance sheet and it's valued correctly on the balance sheet, then data becomes serious, and then there's a lot more gravitas when we talk about it, and it's a lot easier to make decisions around it from a financial perspective. Do you know of any companies where practically they've been able to use one of those valuation models to the point that it's been able to reflect on the balance sheet?
No, I don't. I'm not aware of anybody that's been able to put it on the balance sheet and defend that. I think you may have some CFOs that are willing to take that option and to have their way of doing it, but because it's not accepted and well defined within the accounting fraternity, I think you're probably fighting a losing battle to try to convince your execs that they must put it on the balance sheet.
That's true. I mean, generally the way that it gets approached is it tends to be a sort of a cost plus. So it's a cost.
Yeah, no,
that reflects on the balance sheet, but it also changes as the data itself gets improved, as it grows, as it gets used, and getting that on the balance sheet is proving very, very, very difficult.
Yeah, and I wouldn't work on that. And I like this insights monetization. So what decisions has the data helped you with in terms of giving you new business insight?
Right.
So that's a lot easier to measure, right?
Yeah, that is.
It's a lot more manageable for us to and certainly your CDOs to be able to say, okay, you know, when we started off our data strategy, we had problems with this, this, and this. Now that we've brought this data in and we're making use of the data, these have been some of the data stories that we've learned from the data and the insights that we've got from the data, and these are some of the actions that we've taken. And it's just that process of cataloging it and keeping that history there to then start focusing on what people refer to as insight monetization, rather than trying to get it onto your balance sheet.
Yeah, that makes a lot of sense. Super, thanks for that.
Okay. Yeah, Jeffrey, I do think there is someone called James Price that we spoke about. James Price, we referred to him about that. We did that root cause analysis of why data management programs fail. And I think a lot of it is because, and he certainly talks about it, a lot of it because business don't see the value of the data, and we're not helping them define and come to a valuation thing. So one of the first things you do when you try to set this up is, and the ODI have done a great job where they talk about data value policies. That's what you got to do, is you got to set up these policies within the organization, and you've got to start working towards them, and then targeting and focusing on the value of the data to making business decisions. I think sometimes we run to, let's go and sell the data, but a lot of the data we have, we can't go and sell. And in some cases, they're worried about selling it.
Sorry, I was on a DMBOK course, and it was one of the gentlemen who wrote the book, and he said that in the early 90s, goodwill wasn't really on any balance sheets. It was only on a few companies' balance sheet, and it was a bit poorly defined. But as time went along, goodwill became the standard. It became a standard thing. So he was really expecting data monetization to come into the balance sheets in the next few years, and he said it would be very exciting when it came. But is it really true that no companies has it in their balance sheets at this moment?
Well, that's sort of not what I said. I mean, there isn't a standardized principle within the general accounting practices of valuing a data asset and putting it on your balance sheet. So I couldn't say that no one's put it on their balance sheet, but are they able to take that to the bank and have an agreement on that's the value of their data assets? I don't believe that that's possible. And do we have an auditor that's going to sign that off to say that that's an appropriate value of the asset? I don't think we've gone that far where they have backings. Either if you were to bring in KPMG or Deloitte and they audited it, would they agree with your data valuation? And on what basis?
Yeah, it's very subjective. Yeah.
And that's the problem. So I think you could put it on there, but could you get an auditor to agree that that's the value, that data gives your company that value?
I mean, is that the reason why? I mean, I haven't heard about the insight valuation before, and I really like it because data valuation, it's always like this, right? It's always like, okay, you could and should, and some people sort of see how it could go into the balance sheet, and the question always comes up, and nobody does it, or that it's not a popular thing to do. But insight is different. But and sorry, maybe you have said it earlier and I missed it. Is that what gave the rise to the new focus on insight valuation? Was it the difficulty of data evaluation, or was it? Do you know what gave rise to this?
What I believe gave rise to it, and what the guy, he's from Dell, he was saying is that some people are selling data. We know that. Just like that one example. Let's go through that example of that company. This company is selling data. These companies are selling data. So it's not as if there is no data monetization happening. But the number of companies that have been successful and the risks around it are mounting all the time. And the question is, right, is this really your data, or is it your customer's data or something else? Do you have the legal backing to be able to sell it? Who owns that data? Those are the questions that are mounting that I think have kept data monetization back in terms of its progress.
I think you're right. I mean, there's not a lot of, when people talk about selling data or monetizing it, it's almost always seen in a negative light. Especially if it's related to advertising or like the Social Dilemma, the series on Netflix.
Yes.
About that. It's going to be difficult to put that in a positive light again. Monetization of data is quite bad. But insight is such a, I like it. It's such a, it's sort of, maybe that was the initial intention behind the idea of data valuation, right? It's got.
I think so.
Yeah, you can do good things with it. So maybe that was the intention, but it became something else, and so they had to rebrand it in a way.
I think so, and actually, this guy is one of the leaders, in the big data science area. He actually confesses that he was one of the people that created this challenge of data monetization, telling everybody they must get on the data monetization link, and he's actually felt that he made a mistake. So it was an interesting set of papers that he's been publishing. Of course, he is saying that there's a new approach, and he's the one that's termed insight. And I forget exactly. It's insight monetization, not data monetization.
Yeah, it just sits a lot better.
Yeah.
Mark Skipper actually saw Bill Smart Show speak in a conference that he went to. It was in 2016, I think, so it was pre our EDW trips. But he actually brought some stuff back with him, and I remember he's got a lot of good things to say. He's a good thinker.
But it's interesting. He's backed off that, right?
Yeah.
So he's actually saying he doesn't see that as the right approach. So I mean, it made sense to me when I read it. I thought I can relate to this. I've battled so many times with trying to convince people about data monetization, whereas insights is a different story. And it's a little bit like what we saw some trends with Microsoft on some of the big platforms. Remember, at some stage they were trying to sell data. They had that data product marketplace. Then they moved to the next level where they actually had algorithms that were producing answers, and they were selling answers. So you could be asking questions of that, and they'd be giving you algorithmic answers, which I found, I've always related to that, and it's almost that next level. We're just giving them bunches of data or data products. It's not that easy to use and to understand how to apply it.
Yeah, it's like what we spoke about, that circle or the hierarchy. It's sort of on the end of it where you actually just get an answer back.
Yeah, correct. In terms of your data product definitions, yeah.
Maybe just while I listen to this, I'm actually interested. Maybe we should do a poll or something, a Menti or something next time. Howard, the crowd that attends these meetings, so there's a lot of regulars here, right? And I'm wondering how many of them are from corporates or consultancies or smaller businesses like ours, because these conversations would be interesting. I can't see smaller businesses really, like for example mine. The value itself of any data that I might have is going to be probably non-existent unless I'm being dishonest about it. But insight is a different thing. You don't have to have a lot of data to have insight, right? It's a whole different mindset to apply.
Yeah, it's a good thing. We could actually just work on building a poll and seeing how people respond to that insights and the data monetization. Which ones could they or believe that they could get to quicker and start seeing the benefit of. Any other questions?
Yes. Should I have beer or wine with my braai this afternoon? I think whether it's going to be wine.
I think you're going to have wine.
Wine.
I would backcast wine.
Yes. I think it's going to be wine.
Okay.
But thanks for this. It's a very interesting session. Thanks.
Yeah. Excellent. I mean, that's I think it's something critical that everybody's asking. How do I value the data? How do I move from saying data is an asset to putting a value on that? I think, the cliche of data as an asset is wearing thin. And how do we now take it to a more quantifiable definition? Otherwise, we're not sure whether it's an asset or a liability. But the characteristics are nice. I mean, I really like those characteristics. I can take any data set, any fact table, and I can go through its temporal cover and different areas.
Yeah.
Excellent. Thanks, guys.
Thank you.
Thanks, Howard.
There's a question from Jeffrey. Jeffrey, you got a question there? Sorry.
It was a brainstorming idea, maybe on the application of the discounted cash flow technique.
Yes.
Say, for example, if you're a business that is generating revenue from selling data or insight, you could look at the future cash flows that data is expected to generate, then discount them to their present value.
Right.
And then you to determine what it's really worth now. So then you get the intrinsic value. And then if, say, the intrinsic value is greater than the market value, then you're making an investment. And then if the intrinsic value is less than the market value, then maybe it might not be really worth
keeping the data or even paying for the data. Yeah.
Or
I like
engaging.
that. Yeah. Because how many times as data governance people, we go in there and we see all this data and we have no way of validating whether that data is useful or it's going to be a problem.
Yeah, no, thank you. No, thank you, Howard.
It's a good idea, Jeffrey.
Sure, thanks.
Okay. Mr. Bolton, are you still there?
I am. Thank you very much. Yeah,
All
enjoy
right.
your wine, Paul.
Yeah, you guys are always welcome. If you, Paul, if you leave now, you could be going to be a little bit late for the wine, but I can give you some cold meat tomorrow night.
Cold meat and warm wine. Okay, cool. Or stale wine, yeah. Over-breathed wine, yeah. We're coming down. I'm coming down on the 11th, so I might just shake you up for that offer. Cool.
Oh, yeah. Let's talk.
Awesome. Cool. Thanks, everybody. It's been awesome once again. Thanks, Howard. Really interesting subject, valuation. It's been a bit of a contentious thing for some time now, and it's awesome to see the thinking and the decision frameworks that you can use to value. It's brilliant. Thank you.
Alrighty.
Good night, everybody. Until next time.
Thanks, everyone. Bye.